Well, it's a good time. COVID wasn't a great time where you couldn't travel, couldn't meet people. So at least, the world is back to normal. I think one of the best things that emerging managers can do in times like this is basically give LPs what I call give them a chance to work with them. And that basically comes around, working on new deals and, not put the pressure of doing a fund with with the LPs right away and get to know you kind of a model. And also if they know the LP well, they would know what they have done, what they like, what they don't like, and they have to kind of align their story to what the LPs are looking for, or the views that LPs are kind of more interested in exploring. So you gotta do a bit of a homework to figure out what the LPs are finding interesting to get to their books. Yeah, so in Asia, we always say that there is always this macro risk which are slightly higher. There is geopolitical risk is slightly higher. So there are all the emerging market risks which basically are slightly higher. And we always say that for you to be a good GP in Asia, you need to be macro aware as well. Something that you can probably be a little less of when you're in a developed market, because it's a well built out debt market, well built out M&A market, great management teams. In Asia probably is all the friction is just slightly higher. So the GP has, I would say, a larger role to play, and their skill set and their awareness of the macroeconomic environment should be even higher. Well, emerging managers, what we have seen, if you choose them well, and if they if they perform how they promise, they tend to be one of the best returns. Many LPs I've spoken to have kind of seen that. In our own experience, we have seen, some of the emerging managers, which is basically a fund manager between fund 1 to 3, deliver some really outstanding results, and which is kind of a credit to all the LPs, I would say, target returns. So I think that's one of the best things. And second is, as I mentioned, emerging managers can bring in a completely new perspective on industry, sector, deals, and regions, which kind of is accretive to how the LPs build their portfolio for strategies and for various regional markets. Well, I guess the keyword for 2023 is DPI, and everybody is kind of scrambling to get that in. And the other part is, most of the LPs are kind of looking for more realizations to, kind of continue making new investments as we go in 2024. There's a little bit of a stress around, if the IPO markets continue to remain shut, although, there was a very strong IPO just last week. So hopefully that kind of, restarts things. But I would say, LP is struggling to get some more distributions to remain active in their investment programs. But, I would think that the big trend would be with some level of consolidation. I would say across the industry, there was quite a lot of dry powder that's sitting on the sidelines, and a lot of new funds got raised. And last would be, at some stage, we'll see all this dry powder become active. Means a lot of people have been sidelines for a while. So hopefully, in 2024, we'll back to a bit more normal investment activity.